A record number of home buyers are walking away from their home purchase contracts as economic reality begins to set in for millions of people. Hey, everybody, you're watching Bull, Boom, Bear, Bust. This is my Wednesday, August 18th, 2022 update. As the title infers, we're going to start off here with real estate, and we're going to bring up some charts here. First of all, let's just generalize what is happening in the housing market. Economic reality is setting in for a lot of people. Not only are they seeing the asking prices come down, they're also seeing what's happening with the cost of living. They're seeing that car prices are not coming down. They're seeing that gas prices, although they came down a bit, are not coming down that far. And people are worried about over leveraging themselves now in a home, especially a bubble priced home where prices are now way beyond where we were at the peak of the previous housing bubble. And it's only going to get worse. Now, prices are coming down, but why are people backing out of home purchases at record rates? Well, people are looking at their own budgets, their own finances, and they're saying, hey, this home price is lower than what it was 6 months ago, and now may be a good time to buy, but look at my personal finance situation. I'm in the most debt I've ever been, and the cost of living's not coming down. Why is the cost of living not coming down? The experts on TV told me it was going to come down. Why is it not happening, right? So people are beginning to realize that something is not right. Something is very unusual about this economy, and we're going to get into it now. Let's look at a chart here of these home buyers that have walked away. And this is Redfin data right here. Monthly pending home sales that fell out of contract as a percentage of overall pending home sales. July of this year, over 16%. Now, we saw this similar type of surge in March 2020 at the onset of the health crisis. Of course, looking back now, back then, that would have been a great time to buy. March 2020 would have been a great time to buy. Back then would have been a great time to buy because prices went up big time after that. But people got scared of the health crisis. People thought massive deflation was going to happen, and people backed out of their home purchase contracts in a big manner. Now we're almost to that level. I think it's going to continue to increase. But think about back then. People thought there was going to be deflation. And right here on this channel, we were one of the only channels, the only channel that I saw out there that warned you that prices are going to go up. All those rescue programs that came in, they propped up the housing bubble. They propped up the housing market. They kept the bubble inflated. And, of course, we all saw what happened after that. Home buying panic set in. People were rushing to buy second homes to get out of the cities. People were scared. There was a lot of uncertainty at that time. Well, now here we are. Mortgage rates, they did hit 6% several months ago. They've dropped back down to the mid 5% range. But even that drop in mortgage rates is not saving the housing market. We're still seeing this massive surge in people walking away from their home purchase contracts. But many people were out there saying the economy must be strong because we see all these people at the mall, at the shopping markets, they're all buying stuff. Well, one, how much stuff would they be buying if it wasn't for credit cards? Two, I've walked around a few different malls and kind of paid attention here more recently. I did a video report from a mall down in Chula Vista, Southern County here, San Diego. And actually, when I paid attention, most people didn't have bags in their hand. A lot of window shoppers, a lot of people just getting exercise. And I think about every 10 people I saw, maybe 2 to 3 had actually bags. They looked like they made a purchase, right? Now, we still see people buying stuff, of course. Yes, it is based on debt, most of it. You would probably see 90% of the spending cease if it were not for the availability of going deeper in debt and running up more credit card debt. The question is how much longer are credit card companies and banks going to allow that, right? They cannot allow infinite amount of debt. People have been shuffling credit cards around, refinancing, introductory rate offers for a balance transfer. Sometimes they'll give you a low rate for 6 months, maybe 12 months, maybe 18 months if it's a really good one. But people are shuffling around their debt. The home equity lifeline has been taken away. That's another big part of it. When equity is vanishing, People that are in line to buy a home or have a pending contract, they think about that. They think, wow, I'm going to be underwater. I won't be able to borrow against my home. And here I am living paycheck to paycheck. This is not good. So yes, people are backing away. Economic reality is setting in for a lot of people. Now let's look at the home builder sentiment versus the home buyer sentiment. Home builder sentiment in the green, of course, took a big leap at the onset of the pandemic. Everybody was looking to buy a home, and we see it's dropped off a cliff since then. The same thing with home buyer sentiment. It was very strong for a while, and that is really drastically dropped off of a cliff. That's almost a death plunge. The combination of higher rates, nosebleed levels of debt, and an economy where inflation is remaining high. Yes, we saw a month-over-month dip in inflation, but when you look at it compared to last year, 2 years ago especially, inflation is still wrecking a lot of people's personal budgets and financing. We also continue to see the savings rate plunge. The amount of money that people have left over at the end of the month after paying for living expenses is plummeting at a record speed. And we're about at a 12-year low for that, people. But here's something else to add to the mix here. Even people that bought 1 and 2 years ago, people that normally would have a lot of equity in their home, some of them refinanced. They borrowed against their home. They took cash out refis. And now, even with the only a few months of prices softening and dropping in many cities, people are finding that they don't have much equity. And even when you go to sell a home, even if you have a little equity, when you sell a home, you're going to pay these commissions to the real estate agents. So even a little equity is going to be gone by the time you pay these commissions to these agents, unless you sell it yourself. So a lot of these home buyers, not just recent ones, but even in the past year or two, some even 3 years ago, are in big trouble. And they might end up having to use the lifeline of renting out their home. And maybe we'll see more homes come on the market. Where are these people going to live? Maybe they'll have to move in with relatives. Maybe they'll have to join van life. We did see a report we did a few weeks ago. We talked about how car sales were declining, but the sales of vans actually led the way. Vans was the leading type of vehicle sold when we looked at the data just a couple weeks ago. Is it more people moving to van life because they see that the cost of keeping a roof over their head is beyond what they can handle? Please let me know what you think about that down in comments. Also, the number of listings that have had price drops is surging. Let's take a look at another chart here. Also, out of Redfin, we see 2020 and 2021 in the gray and the blue lines. The red line, 2022, exploding beyond what we saw in the past 2 years, now up over 5.5% of real estate listings that had to drop their price. As we continue into the later part of the year, are people going to be getting into a stronger financial position or a weaker financial position? Well, it looks to be weaker. Debt continues to mount. People are moving more towards, they're walking towards the edge of the financial cliff with these enormous debt levels combined with these high prices, inflation not coming down, ever so slightly coming down, but still way above what most people can afford. Savings rate continues to plunge. Financial cliff is coming here, folks, for a lot of people. Hold your horses. That's what I'm doing. I'm not giving financial advice. Maybe you want to go out and buy that dream home right now because the price came down $30,000, $40,000, $50,000 and now it's in your budget. But I would not be doing that personally. But of course, I'm in a very overheated market, San Diego. If you're in Ohio, Indiana, Iowa, you may not be that concerned. The price may come down a little bit in those states. There wasn't a massive bubble like there was on the coastal cities, but also a lot of middle America cities. Denver, massive housing bubble. Salt Lake City, Boise, tons of bubbles. And that's our real estate update for today, folks. Please give us a thumbs up if you like what we talk about here and subscribe. Help keep this channel alive. Thank you very much for being here. Bye for now, everybody. Peace.